Hi, and welcome to our video series for property investors. My name is Denjola Bhutia, and I'm a mortgage broker representing 910 Finance. And our team, we strongly believe in providing great rates and great service, but also educating our clients. We have made a series of videos for first home buyers, and I have attached the link in the description. Please make sure you watch that. Even if you've bought your first property, there's a lot of good information in there, so that might be helpful for you. Okay, so let's kick it off by explaining why buy an investment property and the pros and cons. Okay, let's move to our slide. Okay, buying an investment property can be an effective strategy for building wealth and securing your future. It can help improve cash flow, offer tax benefits, and is seen as more stable than other investments. After all, everyone needs somewhere to live. Okay, so I've read this word to word, but as you can see, I've highlighted these two important things: building wealth and securing your future. Everybody wants to be financially free. We want to take care of our family. We want to do something extra. We don't want to be burdened with the stress of money. Hence, we want to do something different in terms of investment, and property investing is one of a big ways or modem of building wealth. So yeah, building wealth and securing your future, so those are the two highlighted words, and I think that's one of the main reasons people think of property investments and want to get into it. Okay, so what happens is when people come to us as a mortgage broker, they normally want to invest in property. There are three types of people that technically come to us. One, and the most the ones which we get the most is people have bought their house already, but they want to upgrade to a bigger house, and then they want to keep the current home as an investment property and then buy a bigger home. And that's a default property investor. Everyone starts that way, and then as things changes, then they go and multiply more properties. The other one is people have never bought a home, but they want to buy an investment property straight away, which is not a bad strategy as well. And that's normally termed as rent vesting. So people are renting somewhere, and then they are um, um, they have their investment property to rent it to someone in the meantime as well. For example, people those who want to buy in high-end suburb but can't buy, but still want to live in the suburbs, and with their budget they buy in something small, and that's the second option. And the third option is you've already bought a home, you're happy with there, and the next 3 4 years you don't want to make any changes. That's when people strongly think of investing using any of the extra money, and then they start investing in properties one two three, and you do it in a systematic way. And either whichever option you are choosing, one two three, we're always happy to help, because there are different structures around it, and we might be able to help you in terms of your structuring and getting the loan for a particular need of that investment property. Okay, now let's move to the next one. What are the pros and the cons of buying an investment property? So let's start with the pros: security and stability. As we know, property is very secure, and it's been one of the best performing assets over a period of years, year on. Everyone, we've always heard that, property was so cheap 10 years ago, 20 years ago, we should have bought it then. So that's what it means. It only keeps growing. It be either be inflation or the value of the dollar increasing, the property price is always increasing, and it's a very stable investment. You've got access to tax benefits. In a country like Australia, we have negative gearing, where if we make any losses through investment property, we get some cash back from the tax benefits. And this is one of the big reasons people want to invest, especially for people those who earn good amount of salaries, and those who have those who have good income, you get good tax benefits, which we will be discussing in the coming videos. It's a long-term investment, so you keep it, and the longer you keep it, the more it grows. Yes, you can make some short-term profits as well, but it is more of a long-term investment. It's a brick and mortar, so you can actually see and feel it, unlike shares and cryptos, where you actually can't see what it actually is. You just invest and you hope for it to grow. It's positive cash flow. So what that means is you get rental income as you hold the property, maybe a little bit less in the initial stages, but as the property grows and your loan goes down, there's a lot of positive cash flows to come through. You leverage your investment. So this is one of the biggest thing is, look, you're normally only putting 10, 15, 20% of your deposit, and the bank is giving you around 80% of the loan to buy this property. So that's where you're leveraging your investment. So this is one of the big factors which comes into play, and this is where we as mortgage brokers help you leverage your investment with property investing and structure it properly at the same time. Okay, let's talk about some disadvantages as well. So the lack of liquidity. So look, if you want to sell the property tomorrow urgently, we cannot do that, because not that we can't do it, we can still do it in Australia. It's pretty flexible to get thing, but it's not, it doesn't happen overnight. It takes some time. The entry cost is high, so you need to have some initial amount of savings. And if that happens and you buy one or two and we do equity grows, then it becomes much easier as we go. But it's a higher entry cost as compared to other investments. For example, if you want to buy a share, you can use $100 and go and buy a share, but you can't do that with property. There's ongoing cost, and it's time consuming as well. If you're an investor, you have to keep that in mind. It's a separate business by its side, so there is a little bit of time that you need to keep aside. And the time management is a very important factor in this one. You do have bad tenants sometimes, and if you have a bad tenant, the experience becomes bad. So look, again, if that does happen, don't let that be a point that you don't want to invest anymore, because it could happen with everybody. Just make sure you've got good insurances, you've got a good buffer on your savings, so that if these things happen, you outweigh all your bad things, and in the future it will only grow in value. Possible liabilities. Okay, this is one thing people always tell me is, if the property doesn't increase in value, what's the point of investing? Look, with everything, be it any kind of investment, there is a certain amount of risk, and so is there with property. We never say as a mortgage broker it will 100% grow, but all we can do is look at stats and look at the history. There has been, you know, an history of growth in property, and then it's a much more stable thing, and that's what we believe in. But please do your due diligence in what you think, and all of these videos are just only information. Have your independent legal advice. It's a big amount of money, but if you do want to take this step, we are always here to help you and help you do it properly. Okay, thank you for watching, and hope this video was useful, and see you in the next videos.